Hey there traders, and welcome back for episode number 145 from the Stock Bandit. I'm sure glad that you've joined me. So last week was a pretty important week. The indices did not make a real big net change, but it was really a week of validation. You know, we continued this pullback off the August highs, and we continued to drift lower here. And on the week, we opened on Monday near the highs. We printed 2,200 for the Nasdaq, and then we sold off. We did break this support area at 2155 to 2160. That's the same zone that we found as support in mid-July and of course mid-August here. But once that level was broken, it has yet to be reclaimed. We did come down and validate this 2100 area, which, if you'll remember, is the February low for the Nasdaq. So we came down and tagged that area, and then we were able to rally back from there, and we now stand just a very short distance from this broken short-term support level for the Nasdaq at 2155. So, important here that we've kind of carved out these two zones to be watching as key levels going forward. We do need to see not only a push beyond one of these levels, but a close beyond these levels to really help this market gather some kind of momentum. In the short term for the Nasdaq, we could also draw this descending trend line right here, which comes very close to this broken support area. That's really about the 2160 zone. So, we've got a couple of levels here that, if they're cleared on the upside, might provide some lift for the Nasdaq, but the buyers are going to have to step in and produce that first. For the S&P 500, similar situation. We've got this descending trend line here that also corresponds with this 1065 area. That's been serving as some short-term support until it was broken last week. It also is the May 6th flash crash low. So that's a zone and a level that's really been tested and validated a number of times from both sides in this index. Well, last week we broke that. We came down and validated this late May, early June 1040 level. So we've revisited some levels here. We have now rallied back up on Friday to challenge this 1065 area once again. So here again, we've got 1040 serving as support. We've got 1065 as an area with multiple trend lines of resistance here. If that level is cleared, the S&P may be free to move back up and start working its way back up toward this 1100 area where it most recently peaked. But for now, it remains short-term range bound here. We need to see some kind of momentum kick in for this market that's really been struggling to produce lasting follow-through. For the Russell, this is the small cap index, which last week validated the low set right here in early July. That was at 587. We came down and nearly touched that, and then we rallied nicely from there as the week progressed. So pretty good here to see that support zone holding. Below that, of course, we've got the February low back here at 580. So this is an important area that the Russell needs to hold. But for now, it's got a long way before the next resistance area is met. We've got this mid-August high at 632. We have broken support at 639, and then of course way up here we've got key resistance at 670. So that's a long way off. Certainly would not be seen in a week, but if this index is able to hold this 587 zone and continue working higher, it may not be long before we're facing that 670 zone once again. For the Dow, this index remains below 10,260 ever since it broke it, and last week came down and broke 10,000 a couple of times, but it was able to finish the week back above that. If it can clear this descending trend line right in here with a move up through 10,200, then the next area will be 10,260, and then of course this index has room to run higher beyond that. But the big story here for the Dow is the potential for an intermediate term higher low. That's yet to be determined, has yet to be proven, but for now, if this index is able to rally from here and kind of hold this zone, that would longer term be very healthy for this index and for the overall market. So let's continue to watch that and see how that plays out. And finally, the VIX, which is the fear index. Let me get rid of these. This lower pane volume is not tracked for the VIX, but this is the fear index, and really we've seen this thing remain range bound here quite a bit lately, between 23 support and 27.50 resistance. Now that resistance area was cleared multiple times last week intraday. We never saw a close above it, and ultimately on Friday this thing really gave in quite a bit. It gave up over 10% on the day, and it moved right back down toward the lower end of its range. Not yet testing this 23 level, but that may be right around the corner. So pretty good price action overall out there. For a down week, the market was able to hold key levels pretty well. It's going to be really important, though, for the buyers to step in and put cash to work and start propelling stocks higher if they want those lows to hold. So thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.